Hey, hello. This is Martin from Security, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market plans. The show where we look at technical charts and try to understand what happened in the market and try to plan for a better week. It's starting from tomorrow, April 1st, Tuesday, 2025. So here we go. My voice is not clear. There's some small infection, so bear with me. So we go to the weekly charts. You see that the reversal attempt to previous week is very much evident, and that seems to be sustaining what is a crucial resistance on the weekly chart that we're talking about. And on the right side, you have daily charts also shows that it's been a parallel channel top, and there is some resistance that you're seeing there. And Bank Nifty, you can see there's a wedge is still there, and the bounce was happening at the bottom of that narrowing wedge, and there is a parallel channel reversal attempt that's clearly seen with multiple gap ups on the Bank Nifty's daily charts on the right side. So let's try to see the candlestick. See, this is gravestone touch is indecisive. Saw that beautiful, 1,000+ points of move that has happened previous week. The recovery is so good that there is a profit booking that is coming, and the market is closed indecisive. But Bank Nifty continues to close with a green beautiful candle once again, and you see that the pro gap kicker pro gap professional gap is formed, and that shows the intensity of the positions. But there's some worry about this indecisiveness. It's still the lower high is not clear, so there is a possibility that the reversal can happen here. Daily charts, look at this, 5 days of action. It's nothing but a Monday starting with a gap up, making exactly at the same point of the previous breakdown or swing highs, and then the resistance is met exactly the 23,800 zones, and then reversal happens. That means a inverted V-shape move is what has happened. And finally, the closure is more or less flat. Same in the Bank Nifty also. Monday gap up, big gap up, then an inverted V-shape, and then finally closing almost flat. Same pattern. All the bands are showing there's expansion still there. Everything is fine. It's about 20 median of the Bollinger Bands. That indicates for bullish bias sub moves can still be expected on the short-term charts of the Bollinger Bands, and that's about it. So what is going to happen? It's 164 flattish move, 0.70. It's not very flat, better than flattish. So 164 points gained, and this is after a correction of 16.4. It's 72% value has happened from 2022 June. And 60.4% correction is decent enough, and then now the recovery is happening. 6% recovery is happening. Now there is some selling pressure and set a crucial resistance on as well. Bank Nifty 968. Bank Nifty does not close flattish. It's nearly 2% up, and the correction also is not that deep, 12.4%. And the point is, Bank Nifty is about the 200, 150 all expansion moving average, but Nifty is not that. So candlestick patterns, the gravestone doji, as I said, the weekly Nifty is not that great. Have a pro gap before that, and bullish candle is what Bank Nifty. So Bank Nifty seems to be much more stronger about the moving averages and stronger move. Nifty showing some selling pressure. So overall, it is a gap up followed by a reversal inverted V, not a V, inverted V shape is what we see. So there is volatility, there is selling pressure, there is profit booking. That's what is indicated. But and from here on till it clears at lower high pattern weekly. No, till then we will have pressure. That's a 23, it will have our resistance from the aspect we are about saying, and then 24,800 is clear. That's when we can say that things have heading towards for the next target probably. That is the time, 24,800. And then you never know when it could be a reversal of the downside. That's when that can happen. Bollinger Bands, as you know, it's showing expansion upside, bullish bias, which indicates more moves. Officially, the momentum is the RSI and the trend is the ADX. This is what it shows. Nifty, the weekly time frame charts of Nifty will be shown on the left, and daily time frame charts are shown on the right. So basically, none of them has climbed in the bull zones. Medium term is still sideways and rising up, and short term is bullishness. Short term it is climbed in bullishness, but the bullishness has fallen today. So momentum absolutely fine. Trend ADX is indicating that it's bullishness on the short term as well as the medium term. So the trend has turned bullishness last week. It has not fully turned bullishness last week, but this week the trend and the momentum absolutely fine. But the momentum has not climbed the bull zones. Trend has crossed over the bull zones. That's the main thing. Momentum is at catching up towards the. So some more momentum is required, but the trend has changed. Right? That's what we did. Right side, what charts we are seeing is India weeks, it's 1.3% after a spike of 15% in between. So that's the story. India weeks has spiked up 1.3% and it's at 12.7. And if the spike is like flattish spike again, right? So the VIX is not rising up at all. It is good, even when it was a small pullback that happened last week. So VIX is falling down. It's positive for the bulls. Now, if you look at the open interest analysis, you can see that short covering on the futures OI that's shown level third weekly options OI also showing bullishness. For the Nifty, it's not showing the bullishness. It's clear. So and we're showing bullishness as per the options OI for the April 3rd. But Bank Nifty is for the monthly expiry, so you can compare, these are similar. So Nifty is showing bearishness in the options OI, so betting is on bear side. But options futures OI is built up a short covering, which is bullish. Some contradiction there between Nifty and Bank Nifty, because Bank Nifty is weak monthly. Keep note of that, right? So the open interest can be used for understanding the levels of support resistances, and these are the levels that is put in there. 23,500 and 24,000 is a range. And then big layers are expected the price to move next week. 4 days ahead of that weekly sparrows. Second highest is the 23,000, 28,000, 23,800. 23,800 points, 23,800. The second highest put in call writing is it. Family monthly expiry 200, but it will give an indication where it is. 53,000 is where the highest put in call writing is that. 51,000 is where the second highest put writing is that. 50,000 is the second highest call writing. So that's a range. This is a rough idea on where the resistance supports can come in based on the open interest betting that is done by the big players or option short sellers. The resistance can also be formed from the charts. Here we go. Here we have the technical charts of the 50, which shows that it has clicked the top of the channel and then some fallback has happened, and now there is a gap of it that has happened before that up move on the Monday, and that could access support. It comes to where the 23,400 levels. That support is breached, another gap is there, right next to the, where is the gap? Let me see this, yeah. It was gap support is the 23,400 like we said, and then another gap is the 23,100, and likewise. So that gives gap at 23,400 and 23,000 is very good. 23,000 is also a rolling number, and the 50 expression and the expression gaps are also coming very close to that 23,100, 150 and all this. So beautiful supports down there, and that is also another gap, third gap that's coming in with 22,577, and then Fibonacci 78 is 22,340. A lot of supports downside towards the top of channel. The resistance low is at 21,960 for 22,000. Beautiful support. So now, right now, the major support is going to be 23,000. Major support. Right. Before that, you have 23,402, which is a gap support. 23 is also breached. Then 23 has got a multiple confluence of support, so it's not going to breach. And if that breaches, then you will find supports right there at 22,500, 22,300, 22,000, like this all the way down. Now the resistance, the first previous high where it hit the resistance last week is at 23,800. It's very crucial to clear that and conquer and close above that, because that is very crucial. And once that is cleared, then 24, 226 and 24. 324, it's Fibonacci 38 retracement, and then 24,881 is where the lower price action, lower high will change to higher high, so it's going to be cautious. And then, so all these levels are marked here, you can have a look. And Nifty similarly, it's in a parallel channel at the top of the channel, so first major constraint will be at 52,000, first major resistance on the upside. If that is greater than 52,600, 52,800, 53,000, 53,350, 53,388 is going to be the basic high, where the lower high pattern will get breached, and then it's all-time highs that surely it will go. Downside total supports only 20, 50, 60, 200, 100, 50, 20, all these 6 minutes more averages. It's clear by the battlefield of that. But you have 50,672 where you have a previous high and a gap support. It's going to be very crucial. So 5670 is reached. Only then we have to think about all the Expansion moving average supports that can come in, then 50 support is coming in 49, so $50,000 in there, but $49,000 support, and there's a very good gap at 56.72. Well, so that's downside. We have another gap at 46,081. So long way to go towards that. So that's what it is. So the levels as per that is clearly mentioned here. EMA is expression moving average, PSH is previous week highs, FIB is Fibonacci, RL is rounding number, previous week highs, PSH, Fibonacci, gap, window gap, rounding number, that's all. So compare the charts and what the levels are mentioned here. Correlate that with the option sellers or their better on bottom levels in the place eventually the support resistance is likewise. Let's move ahead and see what the sector indices is talking about. Sector indices are pulled back, everything is given up except for the IT which gained slightly 0.5%, but otherwise everything is not ready for long moves. So IT sector is 0.5% up, otherwise everything is down. Metal is 1.25% down. Order sector is 2.3% down, pharma is 2.2% down, property is 1.1% down, reality is 1.5% down. So recovery that happened previously, ferocious recovery has given back some of the gains, actually for the IT which slightly moved up. That is also flash up. So yeah, it's managed to sustain the moment is all that you can say. Look at the charts, the same sector indices. Left IT at the very bottom. Momentum struggling to climb back to the sideways. Metal consolidated and trying more up, climbing to sideways managed. Auto took a turn, managed to climb back to the sideways momentum. Pharma took a turn, managed to climb the sideways and then tried more. And FMCG is also on the bottom of the parallel channel, but they're trying to move up. With momentum climbing to the sideways, and finally the reality also managed to climb to the sideways. So sideways not really sustained this main thing across the different major sector indices. Now if we look at the industry heavyweight stocks, it's beautiful wide range bullish candle, and it has finally climbed above the RSI 60. Momentum trend, volumes, everything looks beautiful. And there is a chance that some resistance that can come in the previous all-time highs. If it breaks out, that can be a very good move, which can take magnitude to 55 or 60, or if the breakout does happen. It's a parallel channel and it's due for a breakout since a long time. HDFC Bank. And seems to have found the bottom and they're trying to move up, but more or less it's consolidating sideways. HDFC Bank once again hit the all-time high, then try to follow space towards the top of the trend channel. Momentum is climbing the bull zones. So HDFC Bank doing extremely good, and lands also sideways rising up. Now the IT stocks in fee and TCS is still stuck in the bear zones as the momentum is concerned. Black Bank broken out of that very long consolidation and then keeping the all-time highs from the bull zone. So all banks are perfectly doing. ITC also managed to close green, trying to sustain the sideways momentum. So banks is what is holding the market, right? ITC and Reliance just trying to hold on the sideways and supporting that. Banks, especially Kodak Bank, which had been struggling, now it's doing extremely well off the interest bank come down. Looking at the bottom markets, you should that the reversals did happen this week along with the Nifty, and market was managed to climb into the sideways also in the medium term, but some profit booking has come in and then just take close to the red candle or the bottom market indices. That's where it is. But it's the sideways to try to recover and move further up. Going ahead, we're trying to understand how the foreign institutions and domestic institutions participate in the markets. So surprisingly, for the second week, they are buying, and it's 70,400 crores of buying that has happened, which is very positive. And domestic institutions booked some profit, but still they were buyers elsewhere of 6,800 crores. That's good polar buyers, and that's why we had such beautiful rally that happened the last 2 weeks. And net longs also moved up from the side with the Fyers and AIs. Institutional participation, beautiful. As long as it sustains for the communities, that's good that the buyers are buying. Now, the global markets, if you're trying to study the currency markets, the global commodities like the oil, crude, and the gold, and if you try to understand the currencies and the global markets, we understand that. We'll begin with the gold, with the dollar index. Dollar index is spiked up. Usually in a cool off, It's at 85.4, so some call of the US run is good for all, but dollar also seems to have pulled back in the consolidating. Crude oil is in safe zones. Had hit a low at 64 levels and that tried to climb up. It's okay. Sideways is fine. Coal is what is rocking and hit new all-time high last week once again. That we're talking about near 90% of rally just from the last week. So coal rising up always creates is good as a hedging instrument, but creates the doubt if money may eventually or is eventually getting pulled out from the equity market or not. That question comes in when our gold is making or otherwise good. So commodities are fine. Means coal and gold as a hedging instrument is fine, but and oil is slightly spiking, but yes, gained a bit, which global news seems to be okay, but things are not that great with respect to the global stock markets in the US. Nasdaq and Dow Jones in the same fine, all of them are not that good. It's flattish green on Dow Jones, but flattish. It is negative, not even flattish. Negative 1% kind of close in S&P 500 and the Nasdaq, which is not good. Nasdaq is at a very crucial ascending head, so breakdown from here could take it long. 2-3% can go down. Weekly charts we're talking about. S&P 500 also, there's a long way to go down towards the bottom of the channel. So Dow Jones, but moment is actually sideways and then it's almost following index with Dow Jones. S&P 500 Nasdaq has fallen into the sideways moment, into the bearish momentum. So mother market, US market is not doing good is a concern. That way, global goods are not great. It's only the rupee gains and the dollar weakness is what that is advantage for emerging market recovers, but US market, global market is having some trouble in it. Next week we have the US tariff war that intensifies. Now, what are the actionables for the next week? Stock number one. There are not recommendations, only for education purpose. Mind that. Bajaj Finserv, couple handle breakout possibility that already happened. A good risk reward of 1:2 is possible. Momentum trend volumes. Price pattern all in favor of the bulls. So go along on it. HDFC Bank. It's a tight bet. Every time it reaches the double channel, it pulls back. But this time volumes, momentum in the bull zones, trend in the bull zones and patterns could give a chance for a small breakout. That itself is 1:2 and you can take bet on that. HDFC Bank and Bajaj Finserv. Bajaj Finserv and the financial services, HDFC in the bank. Both of them long calls for next week. No recommendations, but for technical studies. It's your risk, your risk appetite, your money, your risk management. If you want to take, it has nothing to do what I say. I'm just showing some technically beautiful charts and then why I would like to invest or I would like to trade this. It's just my. Now the FNS strategy, Batman strategy is coming into picture once again. Additional risk reward, very good range of 23,000 and 24,000 point range. If it remains there, you make money. This is not completely protected. Hedge is missing on both sides, but inside hedge is there and then outside double qualitative selling is there. That what is bought. So it's a Batman strategy. Reasonably safe, but get out if it reaches the borderline. So either side of call the put. So that's a weekly nifty options strategy for April on Batman strategy. And let's try to wrap it up. Market did gigantic move forwards at last week, and last week it was profit booking and it met resistance. 6% recovery, gave up some of the profits, and then momentum is sustaining the sideways move. And finally managed to close green or positive in both the ties into the magnitude. Fact is that the Fyers have been buying more, which is very positive. Remember, we had a 70% nearby rally, and we're talking about only 6.5% of Nifty that has happened. Less than 13% correction in the Bank Nifty. So, yeah, decent corrections, I would say, but not. It could have had much more, but didn't happen. You don't know whether there will be another reversal. It can come down, and then that may happen with a more steeper correction. It's a possibility because we had a tremendous rally in the 2 years with no corrections, major ones, except 20%. Once in 2032. So let's try to bucket to the different factors in favor of the bulls and the bears. So still we see a lot of things in favor of the bulls this week as well, like last week. So there's gained slightly. Here's the for you can see the charts. And there's a turned buying for the second week. So that's good. And as features wise, bullish short covering. And two options wise, more than 1.1 PCR. So that Bank Nifty is Options OI is bullish. Debit is still low. It's spiked, but it's still low, right? It's not rising as much as the market is doing. But there is volatility in the market is evident by the fact that the weeks has spiked to 50% in a week basis before settling for total change of move or fully flattish 1.5%. So the weeks is very volatile, but it's not spiking. It's still in the low volatility region. It's a very good fact. Crude oil falling is good. Many sectors except reality had given back some of the gains. They're all maintaining them sideways momentum. Let's positive us in that. Heavyweight stocks also sustained the bullishness that happened last week. You can see that all the banks like Kodak, ICICI, HDFC are all done exceptionally well. Now bullish bands are bullish, within bullish buyers also above the median. So the indication more optimism can be possible. Total market also has taken off some of the gains last week, but previous week the wholesale terms reflect the same as what Nifty has done. So a few things in the bears market that's a gravestone logic disuses sometimes indicate a reversal. So the stands and market will fall back to the bottom of the channel. You cannot go out that. They're dangerous. Keep that in mind. Options OI for the Nifty is bearish. So overall Nifty is weaker than the Nifty. US market is closer red. There's tariffs that is coming in. In the back of that, you know, the economy, how the increased reaction, counter tariffs, tariff war is a concern. Keep that in mind. Gold is steadily going up, which makes us think that money may eventually get more. Money may not come in. So that's in favor of the bears. Lower high pattern is not happening. And if you close still below 200 expression average, below, even though it managed to climb up with that, but could not sustain. So you have to keep exercise and caution, and then refrain from taking long questions. Have tight stop loss if you take. As I think most can continue for investment, it's no problem regardless of what the market is going up and down. Now US tariffs are coming, this tariff war is still going on. Let's get implemented from next month. So a lot of things and a lot of volatility, unexpected things can happen. Reversal after such a big move last week. It may or may not sustain. You never know. Right. Probably may consolidate this on and then take this on to take the next leg, or it may take another pullback and another lower low and then recovers. You never know. Now there is loss and all that volatility can be expected. So view remains mildly bullish. Mildly, very mildly. I wish I had done mildly bearish, but finally I ended up factoring that there's only gains, the sustainment of the momentum and the crossover of the trend indicators gives hope that it's more mild bullish than mild bearish. Okay. So always keep in mind that technical charts analysis are just probability studies, resistance and support zones where we can bet on. They're not assured things, but black swans or major events like elections and war and pandemic and all this comes, technical analysis goes for a toss. So keep that in mind. It's not a short thing. But you don't have any other option. Otherwise, we would go study the entire company fundamentals before we get place a bet on any of the stock for trading or investing. Right? That's why you also take analysis. But it has its own limitations. But keep that in mind. The next week, the range is today to 524, 300 in the Nifty, and 49,000, 50,000 wide range with bank. So about 26,000 if you're not moving, or 54 you're not moving. There's no hope for another leg of rally. Other than just consolidating. Right now in medium term. Always hedge your positions and then hedge your portfolio as well. That's what you can do. Risk management is all that trading is all about, right? Managing your risk and protecting your capital is what risk management is all about, and that's what trading is all about. Keep that in mind. So always use hedging for portfolio level and then other options and derivatives, and also use hedging to make some better money. There are playlists which talks about several strategies like that. Check out that. So all I have for this week. Back to you on X. And this video content, if you like, you can hit a like button and share to your friends. Put your feedbacks, comments for us to improve. That's what I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye. See you next week.